Well, good morning, folks. Just a super quick update. Busy moving houses right now, so I'm going to just do this quickly for you. So we're basically short the euro, the pound, against the CAD and against the US dollar. Those are moving down nicely at the moment. And the dollar index, as you can see on the bottom right-hand side, let's have a look at this first, is moving up. But we've just got up to that. This is a weekly chart. We've just got up to the weekly 20-period moving average. If we have a look at the daily chart, you can see we're well above the 20, above the 50, and we're breaking through the 100, and we've got resistance just above us at the moment at around 103. And if we can just break up through there, then we should see some more upside to the US dollar. I don't know if this is going to continue today or not, but we are short the euro and the pound. And just let's have a look at the euro very briefly, and you can see that's moving down. We've got some support beneath us. 100-day moving average and this green support line. So whether we can get through there today or during this week or not, I don't know. But indications are that we should see continued weakness in the majors against the US dollar. As we see the dollar strengthen, we're seeing some terrible numbers coming out of the UK and Europe regarding the job situation and the economy in general. And there's also increased speculation that the US may not halt interest rate hikes at the next meeting. So we'll have to wait and see. But overall, I think we should see further weakness in the majors against the US dollar. Generally, you can see the euro is also down against the Canadian dollar, as is the British pound. We saw the unemployment benefit claims in the UK reaching levels that we haven't seen since 2008. So all is not looking good in the UK economy. And I think that sort of thing is going to continue to drag down the euro and the pound against the US dollar. However, these are strange markets and really anything goes, and we're not too sure what's going to happen next. The same applies to the equity markets. When we have a look at the yen pairs, we've got the dollar yen, the euro yen, Aussie yen, CAD yen. And I think overall, we're still hoping that the dollar yen is going to find resistance here at the 200-period moving average. And this downward sloping sort of double head and shoulders, sort of a slightly deformed head and shoulders pattern, but it's there nevertheless. We've got to break down through this rising purple trend line to see this move down. But we are short on the dollar yen and we're short on the euro yen. I think if the dollar yen drops, we'll see that drag the euro yen down with it, especially seeing as that we could see further weakness in the euro and the pound overall. The other one that you could look at is the pound yen. We're not considering that right now. As far as stock markets go, we're pretty much short across the board. We're short on NASDAQ, we're short Nvidia, we're short Apple, we're short Microsoft, and we were short AMD. We'll be looking to resell that again. But you can see these spike highs and wick tops on Nvidia and on AMD, the chip stocks yesterday. That looks pretty good for a potential reversal. And we saw the NASDAQ just making a spike up into just below 13,500 and falling back down again. We've got some resistance above us. We might have to reach up to that. That's this red line up here at about 13,700. That's that resistance line that goes back quite a long way. Whether we'll edge up towards there today or not, I don't know, but we are short on NASDAQ, so we'll have to wait and see how that goes. Having said all that, on the S&P, we've got this sort of lozenge formation forming, and that's a reversal pattern. We've also got this sort of trumpet or megaphone pattern. It's possible that we could reach up and break above this resistance level above us, this yellow zone here, and hit the top of that megaphone. That would be the ideal place to sell the S&P, but we may not have the chance to sell that high up. We might find that this diamond pattern breaks down and that the S&P falls back down to the bottom of this megaphone, just making a new low and potentially bouncing back off the bottom of that after having taken out stops just above there. I think the most interesting one of all of these, though, is Nvidia. That spike high yesterday, that big wick top, and we're still short Nvidia. And if you have a look at the longer term chart, you can see there's this long-term trend line that we've just poked through. That's this one here. We've just poked through there and forced some short positions out, most probably by making a new high, just breaking up above this short-term red trend line and falling back quite dramatically towards the end of play yesterday. So we're still short Nvidia. I quite like that one, and I think that one has potential to head lower. That's definitely a sell on rallies as long as we're below that wick high. And then just going across to commodities and Bitcoin, we're short on Bitcoin off that level there. Have a look at my Twitter feed. There's a tweet on that. Gold, we're not touching at the moment. There's some more thoughts on Twitter on that one as well. We're short on sugar. Just gapped down a little bit yesterday. We're aiming for around about 24.80, somewhere around there, and then all the way down to about 22 or 23. We're long on WTI, on oil. Put up several videos on this and tweets on that. We're actually long on uranium. We did have a pullback yesterday, but only back down to the 20-period moving average. So if you're not long URA, now might be a good time to get in just off that 20-period moving average. If you look at the overall picture on URA, still looks quite constructive. We broke up through that resistance level. We did form this sort of abandoned baby candle just above the 200 moving average, and then fell back down below it. So that's showing some weakness in the short term. But hopefully these two moving averages, the 20 and the 50, and this rising trend line will hold, and we'll see URA begin to move up, and the first target is around about 24. And then natural gas, we did see some weakness yesterday, which is not great, but we're still holding our long position from 2.11 and 2.18. So I've got 50% of my overall desired position size on this, and hoping for a move up into about the 2.6 level. We can just get above that little wick high there and then move up into there and eventually 3. And I think that's where we'll be covering our long positions. The overall target, though, in the long term, it might take until the end of the year, until the winter season, is somewhere in this region here between 3.4, 3.5, 3.6, 3.75. But we might be stuck between $2 and $3 until the winter season arrives. I must just say there is a note of caution after yesterday's wick high and this sort of reversal candle. But we are holding above support and edging up higher. If we look at the NYMEX chart, this is the Henry Hub chart on NYMEX, you can see we're holding above that support, so that looks pretty good. As long as we can hold above there, which is roughly 2.34, 2.33, and move up and break through yesterday's high, we should be able to get up to about 2.5 and then about 2.6, $2.60. So let's see how that goes. For now, I'm not adjusting my positions on natural gas. Well, I hope you found that quick update useful, and I'll update in a little bit more detail. I'm moving house today, so it's going to be a bit difficult this afternoon, but probably tomorrow or towards the end of the week, I'll do a much longer video. If you've enjoyed this content, please give the video a thumbs up, and if you're new to the channel, why not subscribe?